Hello, everybody. At this time, we are talking about call money. Call money, also known as money at call, is a short term financial loan that is payable immediately and in full when the lender demands it. Unlike a term loan, which has a set maturity and payment schedule, call money does not have to follow a fixed schedule, nor does the lender have to provide an advance notice of repayment. And then we move to the key aspect of call money. The first aspect about tenure. Call money transactions have an extremely short maturity period, usually overnight or for a maximum of 14 days. And then second, purpose. It helps banks and financial institutions with temporary mismatch in their daily cash flow and fund requirements. And then third, notice period. The lending bank has the right to call back the funds at any time during the day by giving a very short notice, usually one day. And then fourth, participating entities, banks, financial institutions, cooperative banks, and the central bank participate in call money lending and borrowing. And fifth, interest rate. Interest rates on call money fluctuate daily based on market conditions and are decided through open market operations conducted by the central bank. And move to advantages of call money. The first advantage, flexibility. Call money is flexible for managing liquidity day to day. Financial institutions or organizations borrowing or lending call money do it for the shortest possible time, sometimes overnight. This liquidity allows them to charge their cash positions according to their immediate requirements. And then second advantage, stability of market. The call money market presents helps maintain stability in the financial system. This assists institutions in absorbing unexpected liquidity shocks and reduces the related risk of default for failing to meet credit obligations by borrowers. And then third, efficiency in liquidity management. It allows banks to manage their reserve requirements efficiently. With this facility, a bank may lend or borrow from the call money market, which will ensure they meet their regulatory liquidity requirements without having to maintain excess reserves that would draw poor returns. And then fourth, supports monetary policy. The call money, especially in the call money market, is beneficial for the central bank's conduct of monetary policy. In fact, through manipulation, the central bank can indirectly impact the public's liquidity preference and influence short-term money rates in its favor. And then fifth, cost-effective. Borrowing through the call money market could be cheaper than other means of obtaining short-term funding. However, it's important to note that being mostly unsecured and for very short tenures, the rate of interest on call money is very low compared to other borrowings. This low interest rate may not always compensate for the potential risk involved. And then, what are the call money market characteristics? There are some of the characteristics of notice money market. The first, short-term. These short-term investment plans are typically for a very short period of time, usually one day or overnight. And then second, volatile. The interest rates on notice money loans can be volatile, meaning that they can change quickly. This is because the notice money market is sensitive to changes in demand and supply. And then third, liquid. The notice money market is very liquid, meaning that funds can be borrowed and lent quickly and easily. This makes it a good option for banks and other financial institutions that need to meet their short-term liquidity needs. And then fourth, unsecured. Notice money loans are unsecured, meaning that the lender does not have any collateral to secure the loan. This makes notice money loans a riskier investment for lenders, but it also means that they can offer a higher interest rate. And then, who uses call money accounts? Most of time, call money accounts are used by big companies or investors. These are called institutional investors, and institutional investors put a lot of money in the bank at one time. Institutional investors might take their money out of a call account very fast. They do not always leave the money in the account for a long time like regular people do with their savings accounts. And then, what are the functions of the call money market? The call money market has a number of important functions, including the first, facilitating short-term borrowing and lending. The primary purpose of the notice money market is to facilitate short-term borrowing and lending among financial institutions. And then second, providing reference interest rate. The interest rates associated with notice money loans often serve as a benchmark for other short-term interest rates. As a result, the interest rates in this market can impact the borrowing costs of various other types of short-term loans. And then third, enhancing liquidity provision. The notice money market facilitates the borrowing and lending of funds on a short-term basis. enabling banks and financial institutions to maintain adequate liquidity. And then fourth, facilitating interbank transactions. This market plays a crucial role in facilitating interbank trading. Banks can utilize the market to engage in buying and selling of funds among themselves, fostering smooth transactions and the overall functioning of the banking system. I think it is enough. Thanks for watching.